Okay, here we are. We are live. Okay, so I'm very glad to present at Quattro Chiacchiere con DeversiFi, Dan Yanev and Ross, actually team members of DeversiFi. One of the few, I mean, there are very few DEXs that leverage layer 2 technology to guarantee the safety of the funds of the user, but at the same time, very interesting performances. So nice to have you here, Ross and Jan.
Thank you for having us.
Okay.
Thank you very much.
You're welcome. So we go straight on in what's DeversiFi and what's your role there. So feel free, Ross or Dan, to start.
Yep, Dan, do you want to kick things off?
Yeah, sure. So basically, DeversiFi is a self-custodial trading platform for digital assets, and the focus of our exchange is towards kind of more professional day traders that still want to keep self-custody of our funds. So basically, a lot of the design decisions that we have taken on the way, and we're probably going to talk about some of them later, have been made with this in mind. And it is built on a layer 2 scaling solution called StarkX by a company called StarkWare, which basically allows us to settle more than 9,000 transactions per second, whilst still user funds are always on chain, and people keep control of their funds. So that's in a nutshell what DeversiFi is and how it works.
Ross, do you want to add something?
Yeah, no, pretty much covered by Dan there. As like we said, we'll dip into it in more detail later, but the whole purpose of our self-custodial exchange is focused on professional traders. So the settlement layer, the high-speed settlement layer, is just part of what we've built. So at the same time as having this speed, you can also, you get deep liquidity for major pairs like Ethereum, USDT, wrap Bitcoin, USDT. The exchange is private, so no one can reverse engineer your strategies, and the fees are designed to match centralized exchanges. So we very much think we've sort of one of the first self-custodial exchanges that can match a large centralized exchange for user experience and performance, whilst at the same time users are not putting their funds at risk via exchange or counterparty risk.
Great, thank you very much for the addition. So before getting in the detail of the various features and the relationship also with the Nectar token, we want to think about the story of DeversiFi. We know that, I know that at the very beginning there was ETHFinex, that the name it's establish a clear connection between you and Bitfinex. So we want to understand a little bit the story. So how ETHFinex born and then transformed it to DeversiFi, and why you decided to go in that direction?
Yeah, do you want me to take that, Dan?
Yeah, go for it.
Yeah,
cool. Yeah, so we very correct. We started life as an exchange called FNX, which was incubated by Bitfinex. And it was very much designed to focus on Ethereum assets. And during that time, we were researching all sorts of technologies on how to create self-custodial exchanges. So we ran that exchange for 2 years, incubated by Bitfinex. And then towards the beginning of last year, we thought that the technology was at a tipping point. And it was always part of our roadmap to sort of spin out from Bitfinex and stand on our own 2 feet as a separate company. And everything lined up. So the technology was at a tipping point. Ethereum DeFi was going from strength to strength, and we had clear signals from our community. So at the end of last year, we spun out from Bitfinex, stood on our own 2 feet as a standalone exchange, rebranded to DeversiFi. So very much, DeFi is in the name, and that's kind of what we represent. It's all about open, permissionless trading. And now that's who we are today. So we closed down our old centralized FNX platform, and DeversiFi is now very much a standalone entity, which is all about permissionless trading at high speed for professional traders.
So at the very beginning, if Finex was in some sense, I mean, from a technology point of view, it was some sort of hybrid exchange in this sense.
Yep, exactly. So we started out with a centralized exchange, which was essentially just a carbon copy of Bitfinex, and then we trialed our first product, which was called FNX Trustless, and FNX Trustless was what then turned into DeversiFi. But so FNX Trustless was one of the first dexes to have an order book which was off-chain, but settlement was still very much on-chain. So every trade that you made on FNX Trustless was settled on-chain, which was brilliant because we had the liquidity of Bitfinex and the settlement of the Ethereum blockchain for security, but it didn't scale because some days traders could be waiting for even 8 hours for a trade to settle on-chain, on crazy busy days. And we ran this project and we learned a lot from it, and it was brilliant at bootstrapping a community, but it just didn't scale. And for serious traders, you can't be waiting for your balances to clear upwards of hours. So we very much thought, right, that the next stage of this is to take this onto a layer 2 scaling solution, where instead of every trade being settled on chain, you can do thousands of transactions a second. Your balances can instantly clear, but then the security model is still linked to the Ethereum blockchain. And that's when we implemented the layer 2 scaling technology with StarkWare and rebranded as DeversiFi. And we launched the sort of high performance DeversiFi with the StarkWare settlement engine just over 3 weeks ago now.
Absolutely, yeah. And what about the team behind the DeversiFi exchange, and which were your investors at the beginning and right now?
Sure. So the DeversiFi team, I guess, is not very big compared to kind of other companies. So it's 11 of us, and it's a mixture of people from with experience in kind of like the traditional world of exchanges, development, and so on, and a part of the people kind of very much experienced in crypto. Just under half the team was part of Finex, as Ross mentioned, but now it's grown very much outside of that. And our team is these 11 people are geographically spread around different places. So DeversiFi is very much a decentralized company, so to speak. So these kind of Zoom calls are very much the norm in kind of how we operate.
That's great. And coming back to the investor parts, we know that at the very beginning, Finex has a token named Nectar. So we know also that the Nectar token has an important role in the Finex ecosystem. So, I mean, pivoting the tokenomics of a token is quite challenging. We see many examples. Also, for example, Kyber network, a complete decentralized exchange, right now is going to run the Catalyst upgrade that basically transform the KNC in an hybrid tokens that they, in some sense, give you governance power, give you some rewards, but at the same time is not a full security because it has also a utility. It's continued to be burned. So what about Nectar? So what was Nectar at the very beginning? How is related to the initial investment? And what about now? So the previous investors and the current, investors or users of Nectar token. So what's the role?
So Nectar, I think Nectar is an interesting token when we compare it to like other tokens, and especially I think now is actually quite relevant. So Nectar was never an ICO. So like people never, like there was never an ICO that funds were raised through Nectar. So the original sort of the way Nectar began its life, phase one, so to speak, is now people would call this liquidity mining, basically. So the way the token was distributed is during FNX. Basically, the tokens that the traders that contribute Maker liquidity to FNX would receive Nectar tokens as
reward,
a reward, yes, at the end of the month, based on how much Maker volume they provided. And then this token would give them voting rights on tokens to be added to the platform. So, you know, this was 2.5 years ago now. So this is kind of like the beginning of exploring these incentives and governance. But basically what that allowed to do is, this is how the number of tokens grew. So it was inflationary model. Every month tokens would be minted and given to the Nectar holders. Then half of the fees collected from all users on the exchange would be pledged to the Nectar holder contract. So basically what that created is a large community of holders of Nectar, which were all traders, because that's how they got the token to begin with. And also a large amount of funds was gathered through this mechanism of half the fees that was also pledged to the Nectar holders. Now, and that's kind of where that's what the model looked like until the end of FNX's life, so to speak.
Mm-hmm.
So then, as we were transitioning out of the company, what we decided that the Nectar token model needed to be revamped, because it was kind of no longer as relevant. And actually, liquidity mining, or like fees for incentives for trading, is something that we decided to move away from, and there are kind of a few reasons for that, and we can dive into that as well, because it's kind of interesting.
Absolutely, yeah.
Especially as now that's going on. And then basically what we decided to do with Nectar 2.0 is actually Nectar is now its standalone entity, were the fate of Nectar is controlled by the Nectar DAO. So the Nectar DAO was created. The funds that were gathered are pledged to the Nectar DAO, and the DAO is now live and is making spendings. And all the Nectar holders can stake and receive reputation into the DAO and control it. So Nectar is kind of this token that has this group of holders behind it, which are all traders, and we speak to kind of a lot of the large holders, and they're very kind of intelligent guys that kind of know what's going on, and also has a lot of funds pledged to it. So it's kind of a very interesting, and of course with the DAO has the tools to govern. So it's a very interesting system. Now, how that relates to DeversiFi. There's a symbiotic relationship between the DAO and DeversiFi, because again, percentage of fees from DeversiFi are used to buy Nectar in an auction and destroy it. So as DeversiFi's volume grows and the activity grows, that contributes to the shrinkage of Nectar supply, increasing its value. So that's an incentive for Nectar holders to control the DAO and make decisions in the DAO such that DeversiFi succeeds.
Works well.
Yeah. So that's the relationship between the two. And furthermore, Nectar gives traders discounts on trading fees, which is a feature that will be going live, I believe, in the next month.
Shortly.
Yeah. So that's kind of Nectar in a nutshell. I realize it's kind of token economics is never simple, and it's been a long journey, but I think that's the way to.
It's not easy. It's a very, I know that when I work in Edu, we design many tokenomics. We had also an hybrid exchange too. So I know that it's not easy to design, to better test the tokenomics. And in this sense, now liquidity mining is so trendy with aquaponics system or other analogies from the physics to biology or whatever.
Yeah.
But I would like to understand from you guys, because we also, for example, the flash loans was introduced by Marble and not by AAVE. But we saw the spike of flash loan thanks to AAVE, because we now associate, flash loans to AAVE, or for example, also liquidity mining. Synthetix was one of the first that used this kind of concept. So my question is, it was some sort of time to market issue for this concept to explode, or was related to other reasons? Because, for example, for Ethereum, you decided to, basically move using another technology, and then shortly we will discuss about StarkWare technology, because the performance, I mean, yes, it's nice from the theory what Ethereum wanted to offer, but pragmatically there was many issues. I would like to understand if liquidity mining at the very beginning for you worked for bootstrapping the liquidity on your market.
Yeah, definitely. So, the liquidity mining incentive, I think in the short term definitely does work. And Edfinex, so the Nectar token was applied also to the Edfinex centralized part, which of course was kind of very high performance because and that was and that worked very well. So Edfinex had tens of thousands of users. The kind of average trading volumes were in the tens of millions, and I think at a certain point, kind of the Ethereum USDT market share of Ethereum was kind of like 10-20%. So
yeah, Ethereum at one point was one of the top 20 largest exchanges, probably mainly due to the liquidity mining.
Yeah. So yeah, exactly. So this, although it wasn't called liquidity mining, it was a very effective mechanism to begin with, and I think we're seeing that now with Comp and other tokens, that these incentives are bringing loads and loads of people to the platform. And now what is interesting is kind of like what happens next. So at the beginning, liquidity mining gives you an incentive, which is basically larger than the fees that you pay to use the service, right? So, in Compound, and I'm not an expert on this, but the situation as I believe it is now is the rebate you get in Comp is basically larger than the interest you would pay on your borrowing. So then as a rational economic agent, of course, you're going to do this, right? Like you're making money for nothing. But that kind of after a certain amount, the value is not there to actually provide that, and the rebates that you get in this token basically end up kind of being seen as a rebate on the fees that you do pay. So that's when the fees you do pay are larger than the rebate. So then now you're seeing this as a rebate on your fees. But this rebate is not the same as getting a fee discount in dollars or ETH because its value is less certain. And that basically ends up impacting the value of your token because you're giving away discounts at a discount on the discount, so to speak. So there need to be kind of other utilities or value adds to this token to kind of keep its value high to basically then still support the liquidity mining. And also there's other things to think about in terms of the access to the market when we talk about liquidity mining. So if you're incentivizing certain people to use the product, is that actually making it economically not viable for other people to use the market, which would be kind of real users? So these are kind of the interesting things to think about there. And with Nectar, we saw this initial success at the beginning, and it did drive a lot of people to the platform, and they liked it, stuck around, kept using it. But with time, it kind of the Nectar rebates people were getting were seen as less attractive, because also people want to hold a certain amount of these tokens, right? At the end of the day, they are kind of like an investment, and you are paying some funds to get them. They're not free, and you might decide that you want to hold a certain amount of your portfolio in this token because of
several reasons.
That's a really good point that Dan raises, and we found this from the Ethereum days where it worked brilliantly to begin with, and we've got this really good community of traders who were really passionate about Nectar and the community. But then as other exchanges popped up, and liquidity mining works really well to get you customers there initially, but you have to make sure you're building a product that people want to use for the long run, because otherwise all you're really doing is that they will just leave. So we've had some really good conversations over the past couple of days with people where they've said liquidity mining is great, but you almost need your product to be finished before you before you put into place liquidity mining, because if you do it too early, people will come along, they'll get the rebate or they get the token, they'll sell it, and then they won't stick around. What are your thoughts on that?
Clear. And just to close the liquidity mining the discussion, do you think, just a feedback, do you think that an approach where, for example, Balancer use an interesting approach that as soon as the liquidity reach a specific threshold, basically the mining of the Balancer token ends off, so depends on the pool. So they basically, as soon as the pool reach a reasonable size, basically the liquidity provider is not getting any more Balancer. And this is some sort of equilibrium between, okay, I don't have any more, I get back, now the Balancer mining start again, and so on. Do you think that this kind of, some sense, imposing some sort of, modulate the mining by a model is better, or what are the difference between using a flat mining and maybe let the token the value? So basically what you do is, okay, I still mine as soon as the liquidity grows, it continues to mine, but obviously if there are more tokens, the value becomes lower. So what do you think is the best approach based on a specific concept, and which are the, maybe in some contexts, worse?
Yeah, I think actually the Balancer approach is interesting. I think that does make a lot of sense, because essentially what they've done with that, they've incentivized some people to provide liquidity, and by capping it this way, that very quickly limits the particular market and basically moves people to the next market that still has incentives available, which then creates the effect that Balancer is now going to have a lot of pools with liquidity. And there's, I guess, I mean, I'm sure they've done this calculation, but there's only so much liquidity that they need to make that market now attractive for retail users. So that makes a lot of sense, rather than kind of having one market which is mega liquid because of the incentives, but all the other ones which people might want to use are not, which I guess is kind of like what we saw happening with USDT on Compound, and I guess BAT is now like, there's like 250 million BAT on Compound, which, like, BAT's, it's a useful token, but I'm not sure that there's that much demand for borrowing it. So yeah, I think that's an interesting way of basically making the best of the tokens you're going to give away to provide all users with a better experience.
I think the Synthetix model really does perfect this, though, not in terms of the moderating the change to reward the people that are providing the most benefit to the protocol, but the way they combine it with lockups has been really interesting. So you know, on Synthetix, you earn the token for providing liquidity, essentially, but you then don't get those tokens back for an extended period of time. So the rewards are vested. And I think that's been brilliant, because, you know, the product to begin with had some pain points, but it's meant that people have stuck around a lot longer, and they've seen the product grow, and it's a brilliant project. So I wonder whether maybe Compound and Balancer, you know, they've obviously been very clever and supercharged this to a huge extent, but maybe they should have locked up some of those rewards for the future as well, to make sure that people stuck around a bit longer. I think the proof is going to be over the next couple of months, as the yields get crushed, as more and more people start lending and staking, how many of these traders will stick around and how many will just move on to the next opportunity.
Yeah, I agree. Yeah, in this some sense, I think, to be honest, also because I built SNX Link, a tool for, you know, managing your staking automatically. I believe a lot that Synthetix is a great product. They anticipated a lot of concepts that now we see that are very trendy. For me, it's something like, you know, in some sense, a white bag. I mean, white bag in the sense that they did so many inventions or concept, but they, in some sense, has a very little and very engaged community that never, you know, did
very complex product.
Yeah, because I think that from a, I mean, also from a front-end perspective, at the very beginning, it was everything mixed, and they decided to, you know, split in some sense the staker part. So basically, the one that provide the liquidity for the debit pool to the trading part, but at the same time, it was complex because as USD wasn't available, but also the front end wasn't so. I mean, they didn't invest to me, for me. I mean, in some, you know, user adoption. I mean, it was very, very complex to understand, but I'm very happy right now because many people now are more aware of Synthetix. We saw also, you know, the price or the other stuff is a clear indication of, you know, also the debit pools boomed in this stuff thanks to the collaboration with RAM protocol or whatever. So yeah, I agree with Marcos. I think that Balancer did a very good job for, you know, designing some incentive that basically help them to kickstart more and more liquidity pools and not just the bigger pools, and at the same time not devalue the token.
Yeah.
And Synthetix was a very a master in this sense, also if maybe not so recognized. But anyway, I'm happy to share similar vision on that. So go straight on DeversiFi. So basically on the feature set that DeversiFi offer, but start why you choose Stark technology and in general Stark for scaling instead of Snark or other, for example, scaling solution, like for example, okay, Optimism is still not on mainnet, but other kind of solutions. So why Stark, and why obviously StarkWare? Because, you know, Stark is a protocol per se. StarkWare is a company that built on top of this many stuff and offering in some sense as a service for providers. So why this, and what are the difference? Because there are the difference, especially related to the some sort of decentralization. I mean centralization part, like the data availability issue. So why you choose to go this instead of other technologies?
Yeah, absolutely. So as Ross said, we launched our product 3 weeks ago. However, for us to basically have been able to launch a functioning product 3 weeks ago, we made the decision what scaling solution to go with in 2019. And back then, of course, you know, now we have a lot of solutions which are out and about and are live. Back then, that wasn't the case. So kind of the landscape was still pretty to be determined. And we considered a lot of different solutions. And you know, actually, one of the interesting ones was kind of like state channel based. The kind of plasma ideas, which, you know, now we've seen that is not really kind of dominating and progressing that much, but at the time that was interesting, and we looked at a few others. Now, what was great about StarkWare is that, you know, a lot of these technologies weren't live at the time, and so it wasn't in the StarkX also wasn't live. But the StarkWare team is, as a company and as a team, are very impressive. So that gave us the confidence that we will be able to actually launch a product with them in the timeline we had in mind. Because, you know, like, I mean, launching software products is difficult, and we have also seen that in the crypto space. A lot of companies promise things and then, you know, they happen 3 years later. So one of the things is, the StarkWare is very, very impressive as a company, and we believe that they will be, you know, they will basically follow the timeline as they had intended, and that will help us launch our product on time. Now, when it comes to the actual technology, as I mentioned at the start, kind of like the design choices we've made is basically to optimize for kind of serious trading activity. And what the Stark protocol allows us to do is to have that very high throughput, at the same time keep transactions private, and also the Stark, the Stark proofs. Sorry, when interacting with the Stark protocol, the signatures are quite fast, so that allows for low latency when placing trades. So there are kind of a lot of interesting concepts that they had developed that basically allowed us to put together the product as it is now. And of course, StarkWare is a company that basically they focus on developing such technology. So, StarkX can be configured to be with public data, private data, and they're also working on kind of technologies for payments and for scaling games and so on. So there's this whole kind of, their team is over 30 people, of a very funded company of kind of very, very good developers working on improving this technology every day. And I think one of the things we've seen is when we launched the product, there was interest in the community. Okay, you provide this level of privacy, but that means that there needs to be a data availability committee that holds the data because it's not on chain. Already StarkWare are working on a solution that basically allows to toggle between private and public and not have to make that trade-off, which is something that can be live on DeversiFi later this year. So this is kind of like the type of innovation that a company that's specified there and experts on this can deliver. Yeah, and maybe there's a bit more to add there on the comparison between us and other protocols. So yeah, StarkWare or STARKS, which is the cryptography behind the StarkWare protocol, is very high performance. And a lot of the experts that actually are familiar with this cryptography all work for StarkWare. So, they're not anywhere else. Whereas SNARKs are a bit more sort of open source. And yeah, the difference between the two at a very high level is the StarkWare protocol has been metered, has been tested at 9,000 transactions per second that can be settled on the Ethereum blockchain. But actually, that's just what's been metered, and it's only bounded by the amount of off-chain computer resources that you can throw at it from the cloud. So actually, this is a technology that can really scale with us, because a large centralized exchange, which is something that we're trying to match, at least match, and if not be better than, needs to be able to process hundreds of thousands of transactions per second, or hundreds of thousands of orders per second in those couple of minutes when there's that massive load of trading activity. And this is a technology, so the Stark technology is something that we know can perform as well as that. Whereas SNARKs, you're limited to kind of 2,000 transactions per second, which is brilliant, and it's more than any DEX can do at the moment. But if we're looking a year, 2, 3, 4 years down the line, when hopefully the whole of crypto is trading on layer 2 or DEXs, we need to be able to compete with that. So that's one thing. The privacy aspect is big. Like Dan was saying, professional traders want to keep their trade data private because they don't want to give away their trading strategies or their activity, which is why a lot of them trade on centralized exchanges. And the StarkWare technology allows us to do that by holding the trade data off chain. And there's other things as well. So for example, the Stark technology is quantum proof. So when computing power, gets to a better level in the future, it's not something that can be hacked. So there's all these things added up. And
it's post quantum safe.
Exactly. I think trades. Oh, sorry. I was going to say trade finality is also an interesting one.
Trade finality, yeah.
Where certain rollbacks basically can be challenged, and the states are not final for a while. Whereas with a zero knowledge proof technology, basically everything is final. So as what that means in practice is if you're a trader, make a trade, your balances update instantly, and that's it. There's no way that there could be a challenge on the proof and that your trading gets rolled back or anything like that. And that's important for traders which are kind of hedging across multiple venues, so that you don't end up like opening a position hoping to hedge it and then you don't, and you end up holding a position that you don't want to.
You become broke, basically.
Yeah.
So yeah, I think that I did the same question to, for example, Matt from Loopring, because, for example, for specific use case, the Snark is better in this sense. But for trading, where you basically bother just to raw performances, Stark it's unbeatable because you generate signature faster than Snark. You prove, I mean, it's faster than Snark to prove them, obviously. But the settlement on, I mean, I want to trade. I don't bother about the settlement on chain. My only question is, I mean, the addition of the private and public feature. I think this is something that basically let us understand how DeversiFi is really tailored to the personas of a professional trader that has a specific needs like this one. So I think that it's DeversiFi is satisfying a lot in this sense. My question is more related to the data availability. So basically, I mean, a Snark approach with a universal setup, that is another difference between Snark and Stark, is that, I mean, if the layer 2 parties go away, you are basically safe in terms of users. With an approach with data availability, basically you have that those parties, also if they are quite big, like for example, Infura. So I mean, if Infura runs away, I mean that we have other problems. I mean, all the DeFi went away. So I would like to understand from your point of view how you leveraged or deleveraged this risk. So how much you give a weight to this specific risk of the data availability? Because in some sense, if there is a problem, also your product is affected. So what's your evaluation of this risk?
Yeah, I see. So basically, the data availability committee is a mechanism that comes into play kind of very much in the disaster scenario. So in a scenario where for some reason DeversiFi is unable to operate and StarkWare is unable to operate, you know, the data that's been verified by the proof needs to be supplied from somewhere. So the proofs are on chain, but we don't know what the proofs validate, right? That's the that's the issue. And in the so the idea behind the data availability committee is that in the event that DeversiFi or StarkWare are unable to operate, this data can be provided by a host of other keepers of this data. And as you mentioned, yeah, that includes a number of other parties, including Infura, Nethermind, Bitfinex, Consensus. And we've chosen that selection of companies because, as you mentioned, the chance of all of these companies becoming offline or turning malicious at the same time is very, very small. And at the end of the day, the way to achieve this private trading it requires this data availability committee. So it's a question of, you know, the risk behind that company versus the ability to have private data. And you know, behind every system there will be some risk. And you know, Ethereum itself is at risk. All smart contracts are at risk. Like everything is at risk. So we basically decided that this extra complexity doesn't actually increase the level of risk that much compared to the great benefit that it provides.
And something that we thought about as well, you know, our data availability committee, although it's got some of the biggest names in the industry as members, and we're very lucky that they've supported us from day one, the goal is to expand it. So hopefully when a big trader comes onto the platform and likes what they see, they might want to become a member of that community because then they know that they can get their data back. And like Dan was saying, this is a design choice. And this wasn't something that we just thought up out of thin air. We consulted with some large traders to really get to the bottom of what they wanted. and they were much more comfortable with this zero knowledge roll up or Validium type setup than, for example, running something on a side chain where the security of the network fluctuates with the token that's underpinning the sidechain security model, right? So although it's not perfect, it's if we think it's really is the best of all worlds and really caters for, like you were saying, the specific use case of serious trading.
I see. And now we go straight on to the features. So basically, one of the questions of our user was why me as a checks trader should come to DeversiFi. So in the centralized exchanges, now we have basically all the options that a bank or a trading engine, a traditional trading engine could have. So I have the basic trading, the limit order, the market orders. I can borrow stuff. I can open a leverage position. I can buy maybe some futures. So why I should opt for DeversiFi if I come from SEX? So why?
Great question. Absolutely, it's a great question. And I think the point that I'd like to start with is we're just at the beginning of our journey. So we only launched on mainnet 3 weeks ago, and the vast majority of the work over the past 18 months has been getting this initial version of DeversiFi up and running on mainnet, and the back end and the technology is working brilliantly. You know, we haven't had a single problem with the back end since we launched. You know, there was a few UI bugs, etc., but you know, it's all working brilliantly. So right now, what we've got is a trustless, high-speed liquidity layer for traders to come and trade from their private wallet or custodian against aggregated order books completely privately. So that's brilliant, because essentially now we've got the ability for traders to trade physical assets to the same level that they would get on a large centralized exchange.
Mm-hmm.
And yes, we don't have all the assets yet, and you know, we don't have the latest assets. But if your thing is trading Ethereum or wrap Bitcoin from your private wallet and you don't trust a large exchange, then you can come to us. You can trade with deep liquidity. The next step is to really start expanding that appeal. So starting to add more relevant markets, starting to add more advanced products like the average or the advanced order types, faster ways of interacting via API, of which we've put a lot of effort already into the API portal, because we think this is catering for professional traders that tend to interact with this algorithmically. But over the next 12 months, we'll be adding leverage products, more sources of liquidity, cross-chain products, all of the good stuff. So right now is really just the beginning.
That's quite nice. And talking about one of the maybe interesting stuff is that if a new token happens in the DeFi, you can list very easily, because compared to a centralized system that maybe has some due diligence and other stuff, it's easier for a DEX like yours to do this kind of stuff. Also because I know that is some sort of difficult arguments, but in some sense, one of the interesting stuff of decentralized exchanges is that you don't have to share your identity. So you know very well what does it mean a KYC. Also, if it has to be done legally. So the process, you have also two different KYC for different exchanges. So this kind of stuff enables or anyway opens plenty of doors, but at the same time facilitate a lot this kind of adoption. So that's interesting. Then later I will ask you what we are going to see in the next weeks. But I have some questions from the users and also my personal question about your product. So first of all, the first question is, we talk a lot about capital efficiency and don't have the assets that maybe are starving, because basically when I joined DeversiFi, I lock my assets in a specific deposit contract. So one cool idea could be, for example, give them available to a curve, a compound, idle finance that aggregates between the various parties to get the best yield. And this could be an interesting stuff, because when I play or I trade on DeversiFi, basically I play in the sense to use the you know, some traders say I play on some exchange, but anyway, playing. So basically, for lawyers, we are playing just tokens, you know. But anyway, you deposit that asset, having the asset that maybe gains some yield because it's borrowed to another parties, is something that we could see in the near future, or is something that you know, they will starve there and get some dust in the meanwhile.
Yeah, actually, so this is one of the great benefits that DeversiFi has over a centralized exchange, is that because all assets basically live in smart contracts, we are able to integrate with other DeFi products. So what you just described is possible. And now that we have kind of basically the platform is live, and kind of this stage of work for us complete, we're going to turn to integrating a suite of other DeFi products into DeversiFi to basically combine these abilities. So something like what you described very much is kind of like along the lines of what we're thinking. Of course, we're doing now some research to see what are the most kind of like beneficial ones for users, which ones would have the biggest impact to prioritize. But gaining yield on your funds as they're in the exchange is definitely something that people are interested in.
Yeah, that's really interesting. And also because, I mean, also indexes, what you can do is, I think that the 0x introduced in February, I think, because I participated to that call. Basically, you can open an order without the underlying liquidity. I mean, what you can do in indexes is that you open an order, and then only if it's matched, you can open a flash loan using the YDX or AAVE to basically execute it. So basically, the order express in this sense is concept. So my willing to buy or my willing to sell. Then as soon as concretize, basically there is the settlement. So using I mean, in your sense, basically you are realizing, because the asset is deposit over there, maybe it's landed, and you play in layer 2, and basically you play with virtual orders in this sense. You can also amplify liquidity in this sense.
I think I think I was about to say the same thing as you, Dan, so you go ahead.
I was just going to say that, like, layer 2, you know, it provides all these benefits in terms of speed, but it does introduce some friction when interacting with layer 1. And one of the key things for making the system trustless is that funds need to be present to basically ensure that everyone can be matched, right? Because otherwise, you know, we are making trades that we can't cover. So although something like the flash loans is not kind of as straightforward to do on layer 2, there are kind of ways in which we're thinking how to work on capital efficiency, basically. But at the same time, making sure that the system is trustless and all the funds are there to be matched.
Yeah. I mean, if you have to realize this kind of stuff in a traditional DEX, what you can do is basically you trade with AAVE token, basically, because they represent one-to-one the assets. So basically, when you open an order in your wallet, automatically you basically earn more and more. But when you match exactly the same amount. Using a token like Compound or other ones, where the ratio between the stuff, it's more complicated. But anyway, this kind of financial stuff is pretty interesting. So coming back to basically many people talk about this kind of, you know, also because aquaponic and other stuff, replication is a very powerful concept. The other stuff is more related to the growth of your platform. So talking about numbers, how many users we have in DeversiFi, and what's the volumes of the exchange, and what's, if you can share, obviously without the tactics, obviously, but what's the strategy to have more and more users?
Sure. Maybe I can take the first numbers question, and then Ross can talk about the future. So in terms of the growth stats, we've actually made this public on Dune Analytics, so everyone can go and check out the dashboard with these numbers. But basically, since we launched earlier this month, we have just over 300 registrations, and I believe 500 or 600 deposits. Which is a growth rate kind of in line with what we've seen from kind of other DeFi projects which have kind of now become successful. So in terms of users and registrations, we're pretty kind of happy with how that's progressing. And of course, we are kind of actively working on promoting and adding new things to make sure that growth does continue. And in terms of volume, our volume has been kind of growing steadily since launch, and the total value locked, I believe the average is between 500,000 or 1 million a day. And we're really seeing wrapped Bitcoin trading taking off. So, wrapped Bitcoin itself is becoming more popular. Yield farming and REN are making that even more popular. So we're seeing, a lot of people come and utilize the DeversiFi market, which is unique in the sense that because we map it to a very liquid, centralized Bitcoin market, the spreads are very low and the liquidity is very high in that market. So, and that's kind of nice taking off. Ross, do you want to talk a bit about the future?
Yeah, sure. So like Dan was saying, there's a Dune Analytics board, so everyone can track this. Total lock value is just above $2 million now, which is really nice because what we want to see is people coming and leaving their funds on the platform so that they've got it for trading, in the layer 2 whenever they need it, which is great. So now we've launched, the backends are working lovely. We're making all these little changes that make the user experience even better. So for example, adding more wallet connectivity, because lots of people don't like using Ledger, they want to use something else, or they're not comfortable using a browser wallet, they want to use something else. So that's one thing. So really making it as easy as possible to come and try the platform is one thing. Adding all these new DeFi integrations, like Dan was saying, will be brilliant because these are really useful things that solve real pain points for traders. So adding those will be brilliant. Getting the word out there now. So we've been a bit quiet over the past couple of weeks as we've launched, just because we've been making sure everything works properly. And now is the time to really start pushing. And the really cool thing is when people come along and try the platform, they love it. You've got market orders working trustlessly. You've got balances that instantly clear. You've got unique markets. So really, it's just adding more markets that traders would like to trade. There is still a couple of pain points on the platform at the moment. So because we're a layer 2 platform, we've introduced new things that people aren't used to seeing. So to begin with, I don't know if maybe you found this as well when you tried the platform. People were expecting it to be more like a Uniswap, where you can instantly get your funds out of the platform. And people were like, well, I didn't realize this. So we were like, oh, well, we need to add more warnings about this on the platform, because to decentralized exchange traders, this was strange. But traders coming from a centralized exchange were fine with it. They were like, oh, okay, there's a way, no problem.
Yeah. In fact, just a suggestion in this sense, I see that in this sense, a concept that is going to be used thanks to the traditional world to PSD thanks to PSD protocol in traditional finance. Basically, they show in the wallet of the user or in the fintech app, basically the funds that you should have. So basically, for example, if I use MetaMask, you can build some sort of plugin that basically call your API and say some sort of virtual balance of the user. basically. And when you try to spend that specific, it say, hey, you have to withdraw. Do you want to withdraw? Yes, please click here. So having this, I mean, the user feel confident if it will see in their tool that he used. So an integration with, I don't know if Wallet Link or Wallet Connect has this kind of feature, but I see the problem. Now I just want to go straight on to the question that user asked to us. So first of all is, okay, have you in plan to add some sort of meta transaction for executing the deposit withdrawal and other stuff? So in some sense, leverage better the experience in terms of withdraw and deposit, or you already have. So when you deposit on DeversiFi, you have to spend, I mean, an Ethereum fee to move the assets. Many players right now, from traditional platform to the most advanced one, pay the fees for the users. This is something that, basically for me, especially for me, I mean, as a user in this period where you have a lot of, I mean, if I can create, if I can create an account, for example, think about another exchange like Loopring. When I create an account, I do a signature, and then I have to create some sort of position inside. So basically, I have to do two taps. The first one is just to sig. The second one is to do a transaction. Hopefully, in the same transaction, when you create, you can also deposit an asset. But for any asset that I want to play, I have to execute a transaction. If the user may be able to, let's say, pay with the asset be transferred instead of paying the gas himself. So having this kind of stuff, so the meta transaction, basically a relayer that pay the gas fees on their behalf is something quite cool that helps a lot in getting onboarding users. And for the platform is, I mean, opens the door for a denial of service. I mean, many users that create specific
That's
account.
the problem. Yeah.
But this is something that you can say, for example, I can give you the funds back on the layer 2, for instance, or I can block inside. So it's something that you can control. But basically, the question, I enriched the question with my consideration. But the question is, are you willing to facilitate a little bit, I mean, in this sense?
Yeah, we have thought a bit about this, and I think the ways you mentioned are kind of like along the lines of what we're thinking. So the first one is paying the gas on behalf of the user. So that's something that we actually used to do in DeversiFi 1.0, where basically all settlements would happen on chain, and there we would pay the gas on behalf of the user. Now, of course, for trading, people don't have to pay gas, but for kind of entering the system, they do. So yeah, that's one of the things we've thought about. It's it takes a bit of time to implement. It's kind of not as straightforward. So it's kind of and then basically the second thing you mentioned is the simpler version, which is just giving people a rebate for the gas once they've signed on. But yeah, gas prices have just skyrocketed. So it really is becoming an issue to interact with any DApp, because the thing is, deposits and withdrawals are basically a normal Ethereum transaction. There's not like anything kind of that weird about it, but just a normal Ethereum transaction is now becoming prohibitively expensive.
But to add to that, I think if you guys have been playing around in DeFi the past couple of weeks, you know, some of these smart contracts that you're interacting with, they've got such high overheads. You know, it can cost, you know, $10 to do a transaction. Yeah, 50. Well, yeah, that's what you've been interacting with. But one thing that I think one of the advantages of the way that we design the system is that, you know, I'm quite proud to see that when you deposit or withdraw on DeversiFi, even during peak times, you know, you're still paying $1 or something for a fast transaction. So it's not a hugely expensive protocol to interact with. And obviously, once your funds are on the layer 2, then you can trade between 0 maker and 0.2% taker. So yeah, I think, like you said, anything we can do to help with that pain point, the friction point of onboarding would be brilliant. But you know, it's not like we're a very high expensive platform to interact with anyway.
Yeah. Also, it's great to first think about providing value to the users, and then kind of making it as seamless as possible. Because if your product actually provides value to people, you know, it does make sense for them to kind of overcome these problems. And I think, for example, with Curve, that's something interesting where, you know, the Curve UI is not the prettiest one in the world, but their product does something that is, you know, actually very useful. So, and we see that there is activity there. So I think kind of for us over the next few months, the priority would be to kind of enrich the platform with things that people, the traders really can extract value from, before focusing on kind of making all of these kind of little pain points.
I mean, for instance, for a serious trader, so your target, basically, this kind of stuff is, you know, it just a UX is not in terms of, it's not a cost problem, it's a UX, because I have to wait, for the transaction to be settled. Maybe if you give me the option to change the gas, maybe I can say, okay, if you give me the option to lower the gas price, I lower the gas price, now the transaction is stuck. So the idea is that if you remove the control of that stuff, and at the same time the user pay for this stuff, because you basically, the user, when deposit, you take something from the deposit, but you manage in terms of UX, it resembles a very centralized experience. So that's my thing, that the user want to target this stuff. So beautify, in this sense, the experience, like, okay, yes, I have to see something with the Ledger or MetaMask, but I enter fast, I exit fast. So that's the idea.
It's interesting. So just quickly on that, you bring a really good point up. And when we launched the product, we actually were optimizing for a lower gas price, and it caused a lot of people to actually not even register with the exchange because their transactions failed. So quickly we had to then increase the gas price, and that meant less people were complaining. And that was the biggest pain point we had on the first day, was the skyrocketing gas price.
Yeah. Okay. The other question of the users. Okay, I know who is he. So basically, for market makers, so how it's easy to integrate with DeversiFi to help, and he asked also how many market makers we have on DeversiFi. So basically, how is the competition?
I can answer this, Dan, if that's all right.
Yeah, go for it.
So we're actually very unique, DeversiFi. So we are able to bridge liquidity from centralized exchange sources, such as Bitfinex. So when you go onto the DeversiFi platform, we are essentially mapping the liquidity of centralized exchange order books onto our own order books. So we don't have any market makers in the traditional sense of the world. We don't pay anyone to, you know, bring liquidity from elsewhere onto our platform, which is brilliant. But if, you know, serious traders who are looking to use DeversiFi as an execution venue, we've put a lot of work into our API portal. It's a product in its own right. So, you know, it was almost as difficult to put together as the DeversiFi platform itself. You know, it took many, many months, and we wanted to make sure that it was a product that anyone can come along, they can play around with the API. They've got all the libraries, the documentation, examples, everything all there ready to go. And we've seen a couple of people set up already, and they can pretty much pick it up and run with it. And it just takes a couple of days to integrate with the exchange, using, you know, WebSockets or REST API.
That's great. And okay, the other question is more related to traditional assets. So basically, if it comes from Bitcoin, basically, which are the opportunities to bring my liquidity through you? So basically, are there only the WBTC or any other version of the tokenized Bitcoin an option? So basically, I have to go to the venue that basically translate my asset to BTC, or are we going to see a tight integration with BTC in DeversiFi?
Yeah, so the DeversiFi being, Ethereum focused, what the technology allows is, Ethereum assets. So Bitcoin natively can be supported, but Bitcoin is the most popular market and is the most traded market. So we are very, very keen to make the Bitcoin trading experience on DeversiFi as good as possible. So the first step towards doing that is listing wrapped Bitcoin and connecting the wrapped Bitcoin market on DeversiFi with a centralized Bitcoin market, which provides us with this great liquidity, and we're the ones that do the swap in the background for users. Now, so yeah, this is the first step. So we provide a very liquid wrapped Bitcoin market. Now, what we want to do in the future is basically to cater to people that come with Bitcoin assets as well, and also to basically support the Bitcoin versions on Ethereum. So the more Bitcoin we see on Ethereum, like amazing, and we're kind of happy to support the liquid versions of that as much as possible to see that grow.
Yeah, so big fans of wrap Bitcoin, Ren BTC, TBTC. We want to see as much Bitcoin on Ethereum as possible.
Perfect, great. And the latest question is more about I think usability. So right now there is a web app. Are we going to see a mobile app like Bitfinex, for instance, or are you going just to be a desktop platform?
I think to begin with, the core market is very much focused on desktop trading. But for example, you'll be able to deposit from a mobile wallet very soon, and then over time, we'll be adding more advanced orders so that you can manage your position when you're away from your desktop, such as stop limit orders, conditional orders, etc. But then over time, as the platform grows and the appeal widens, if traders want to see a mobile app, that's something that we can do, and it is already being requested. So I think it is on the roadmap, but there's a few other things to do first.
Okay, so we end up with the user's question. So basically, we have just the latest two questions on my side. So the first one is, we as user, what are going to see in the next weeks on DeversiFi? More pairs, more features, so exactly concrete stuff. So we are more willing to try DeversiFi.
We don't want to announce an announcement before it comes out, right? So, but I think over the next couple of weeks, what you will see is more wallets, more pairs, and some UI improvements over the next couple of weeks. And then after that will be DeFi integrations. And then after that will be more of the sort of margin and those advanced features, if that answers your question.
Yes, I mean it's me and of our user. Yeah. I mean this is exactly what we are willing to see. More pairs to play and more integration. I mean, because it's very useful. Because I didn't know, but many people use very different wallets, and they. I mean, if we have some sort of universal protocol in this sense, and it seems to be that there are 2 or 3 standards in this sense, would be quite good. Okay, the last question is an interesting question, because you guys, Ross, Dan, have you a question for me and for the community?
Yes, yeah, definitely. I've got lots, but maybe if I pick one and you pick one, Dan. But for me, it's it's a favor to ask, really. It's a question and a favor. It's do you like what you see when you go to DeversiFi and trade, and would you be willing to provide feedback over the next couple of weeks and months as we grow? Because the earlier we hear feedback from serious players like you, then the better we can make the product.
Okay, great. Go ahead with the question, then I will answer to both of them.
Sure. Okay. I hadn't thought about this, but I guess if I was to ask a question to the community in general, is we have seen like a lot of a kind of explosive growth in DeFi over the last month. Is everyone hyped up to keep that going for the rest of 2020 and beyond, or are we ready to keep this going?
I'm not a wizard. I would like to start with the latest one. So on my side, I think that in some sense we got the attention, but I think that now people maybe just positioned themselves to say, okay, I don't want to lose this or this opportunity. So we saw a big spike right now, but probably in the next weeks or month, there will be more and more people from traditional world that will study what's going on. Before they will say, okay, how much capitalized? Less than 1 billion. Okay. Come back when there are more money. They saw a spike in growth, these incentives, this new concept. So I will ask us to our community, but I think that probably there will be a stabilization, and then also the graph of the cycles of a product. Then probably we'll start. I probably, as we saw with WBTC, I remember the night when I saw from the bot that I built with Al that there were flowing 1,500 BTC on WBTC. I think that we will continue to see, we start to see, bombs of thousands of Bitcoins that are coming in, or stable coins that are coming in. But I think that probably in September, I think that also during the summer, usually traders close the position, go to holiday, and that's all. So that's my my position. Coming back to the first, but anyway, I remain bullish to several positions, especially Synthetix, and also a reserve token that is a Nectar, obviously, obviously. But yes, I think that I think that now people you see the tokens that capture the value. Before there was, I do a token that maybe governance of what. So basically right now we see that also because when try to design a new token, was thinking, okay, how I can capture the value, what's the value that I can capture. Now the borders are more less fuzzy. Like this. So it's easier also to design a token that capture the value because we have patterns, also because we have successes and failures. And coming back to the first question, obviously, I mean that our users are avid to exploit, and no, I'm joking, obviously test the various person and provide a lot of feedback, especially during launches. You can also ask to other platforms from Loopring, Idle, AAVE, Compound, or whatever. When we presented to the community new features, they try, they see, this is a pain point, it's not working. So this is something that or maybe this is fucking cool, please add more and more. So we are reaching 10 people, and we are 2,000 of people that use the DeFi Italy channel. So yes, for sure, this is something that we can provide directly in the group of DeFi Italy, or and it is also in the link of the YouTube channel and in the description on your group. So most of the people of our group. So yes, this is something that we can do, me especially, but also other members of the community can do for sure. I think that now we just to clear, we are in a phase where there is some hype. There are also scam or other not so useful stuff, but we are in a phase where we probably have, I use the term probably just to be safe, some use case that works with Ethereum, but any Ethereum. Like obviously Ethereum has a strong brand, so other competitors have to provide a very bigger value than Ethereum in this sense. But to be honest, I see that also if it maybe remains just to the financial sector, I would like to see more in the insurance, for example, or in other sectors. I think that we start to see real use cases, and DeFi was, I think DeFi was born at the end, I mean, the beginning of the last year, I think, or something like before. Also the terms, before there was some sort of open finance, then DeFi is more, appealing in this sense, but that's all. So
Brilliant.
I think that we conclude. Let me stop the stream and then we just do a little debrief. Okay.
Amazing. Thank you for having us.
Thank you, and thanks everyone for the questions.
Okay.